Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, our currency is ending the month at its lowest level of the year so far. But first, the Chinese coronavirus has now spread to India and the Philippines. And Russia has closed its Far Eastern border with China. And Vietnam is considering doing something similar. Many of the world's major airlines have cancelled flights to and from China, and some countries are putting cruise ships with Chinese passengers into quarantine. And new estimates suggest Chinese economic growth could drop to 4.5% level in 2020. The World Health Organization's Committee on Pandemics is meeting today for a third time in a week and will likely declare a full-scale emergency, and that will trigger a more coordinated international response, but it will leave China very isolated. Elsewhere, the American fourth quarter GDP estimate is out and has come in at 2.1%, right on market expectations, and exactly the same level as the second quarter and the third quarter of 2019. It's a level that is lower than the average for the past 3 years, held back by tariff wars and excessive deficits, and it is well below the administration's own 3% target. In Europe, rising business sentiment in both France and Germany is offsetting flat consumer sentiment levels as businesses shake off their negative outlook for 2020. Equity markets are all lower today, continuing the risk aversion slide that set in yesterday. The S&P 500 is down 0.7% so far today, and that follows European markets were down a sharp 1.4% or so overnight. Yesterday, Tokyo ended up down 1.7%, and Hong Kong fell 2.6%. And Shanghai is scheduled to open on Monday, but expect that to be delayed. Whenever it does open, however, there will be serious red ink everywhere. Australia's mining industry won't get off lightly either. Not only is Chinese industry severely constrained, but Chinese ports may be closed to shipping soon, and that would bring a rapid halt to their operations. Obviously, such a move would heavily impact New Zealand's growing trade with China as well, and that includes our tourism industry, which will be heavily affected. No one is going to get off lightly here. And in Australia, ANZ Bank is accusing regulator ASIC of collusion and abuse of power in a court battle that will leave it exposed to reprisals when the judgment is released. US Treasury 10-year yield is even lower today, down 8 basis points after yesterday's fall and now at under 1.54%. Gold is up strongly today, now up to $1,581 an ounce, and that's a rise of $11 in a day. And US oil prices are sharply lower today, down by more than $1.50 and now just under $52 a barrel. And the Brent benchmark is now just over $58 a barrel. Demand fares are weighing heavily here. And the Kiwi dollar has also been knocked sharply lower today by the retreat from commodity currencies. It's now at 64.9 US cents, a drop of more than a quarter of a cent. On the cross rates, we've held at 96.6 Australian cents because the Aussies are suffering the same fate. Against the euro, we're also lower at 58.9 euro cents. That leaves our trade-weighted index at just under 70.4 and a new low for 2019. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.